This video and all other videos on this channel are for entertainment purposes only. The content of this video and all other videos on this channel are the opinions of the creator only and do not constitute legal, trading, investment, or financial advice of any kind. Investing carries a high level of risk and the majority of retail clients lose money. Do not invest any capital unless you understand the risks and you are prepared to lose it all. Alright, hello and welcome to Camel Finance. I'm your boy Camel, and it's nice to have a quiet week, if I do say so myself. I know some people are probably bored, but I'm enjoying putting my feet up and relaxing, letting the market do its thing whilst we wait for some cycle lows. There is a very significant piece of Bitcoin news that has just come to light, and that is that Blackrock now requires Coinbase to deposit Bitcoin directly on-chain within 12 hours of instruction after concerns were raised. Blackrock was selling paper Bitcoin to ETFs. BlackRock were allowed to settle a bunch of transactions for Bitcoin off-chain, and this, of course, has led people to speculate that perhaps what they were doing is naked shorting this thing, whereby they could, in theory, take the Bitcoin that is held by Coinbase's custody, sell it into the open market, and then so long as they buy back at some point and replenish the Bitcoin back to Coinbase, they could, in theory, hide the fact that they were selling that Bitcoin. And the reason they could do that is because it was not being settled on-chain. Needless to say, this raised a great deal of concern, and people were starting to wonder if we were going to see something similar to what has been going on in the gold and the silver markets for a very, very long time. But the news has just come to light that BlackRock has just amended its Coinbase custody agreement to require 12-hour withdrawals amid the debt rumors. So now they have to report and settle these transactions on-chain within 12 hours of withdrawing from Coinbase. So to be clear here, I'm not saying that they were taking Bitcoin out of Coinbase, selling it in the open market, using it to suppress the price, and then replenishing it lower down at a later date. Nor am I suggesting that they had some kind of nefarious plan to create some kind of FTX type collapse, wherein they were taking people's money and not actually using it to acquire Bitcoin and that kind of thing. I'm not accusing BlackRock of anything like that, but up until today, up until this amendment has been made, then it was in theory at least possible to have some kind of nefarious activity going on with the ETFs. We know these same kind of tricks have been seen for many, many years with the gold and the silver market ETFs. So I think overall we can say this is bullish, okay? If they were doing it, they are either not going to be able to do it anymore, or we're going to be able to see that they have been doing it. We're going to be able to see it on chain now, albeit with a 12-hour delay perhaps. It does make me wonder, however, if we think about this little red squiggle here as the 16-ish K bear market lows for Bitcoin, we then obviously did something akin to this, straight up to 70K, 73K, and since then, for the last 6 months, as I'm sure you're well aware, we have chopped around in this 25-ish% range for about 6 months. It does make me wonder, if I put my tinfoil hat on, if perhaps they were doing some jiggery pokery with the ETF in order to keep this price in a range whilst they wrecked all the longs. Because remember, the worst thing about a range is everyone is wrong. If you're bullish in the range, you're wrong because we're not breaking out and continuing. And if you're bearish in the range, you're also wrong because we didn't break down. Okay, so everyone that longed the lows got stopped out. Everyone that shorted the top, okay, got stopped out. And we spent this 6 months just wearing people out, wearing them down to a nub, emotionally draining them. And we had this almost time-based capitulation in here. And I do wonder if the name of the game was to accumulate the most amount of Bitcoin, or perhaps to let large players in, then could this whole jiggery pokery with the ETF been one way to keep the price range bound for a while and stop it reaching escape velocity much sooner than it likely will do? Again, I'm just wildly speculating here. I do see a lot of people that have BlackRock down as a very, very nefarious player, or they think that there's some kind of grand scheme to keep a lid on Bitcoin. I actually don't agree with that. And I see a lot of people say that Bitcoin's a heavily manipulated market, and all markets are manipulated to some extent. I really don't think Bitcoin is particularly manipulated. It's my humble opinion that games do have to be played, right? We do have to have these shakeouts and a lot of volatility because the supply is so limited. And the only way you can allow somebody to step in like Michael Saylor and buy some kind of huge 1.1 billion order, which we saw him do over the last couple of days, the only way you can do that is to create this kind of big choppy range and have him nibble with a bot at every possible level. Okay, that's the only way you can actually let somebody in for 1.1 billion without really forcing the price up. So I do think to some extent we're going to see that kind of thing, but I'm sure you see that on low market cap stocks as well. I don't really think this is unique to Bitcoin. And as I have said many times before, I think if we assume they have got an agenda for Bitcoin, okay, I think the agenda still, to this day, I think the most reasonable thesis for what their agenda could be, what I would do if I was BlackRock, I would want to pump this thing up, crash it in an extended bear market, okay, knowing that the Fed is going to be reluctant and late to print and is not going to be stepping in with that money printer and true QE with outright return to balance sheet expansion until 2026 when that 4-year cycle low is due. As I've said a million times, I think if I was BlackRock, the way I'd want to do this is to break the cycle, have the top earlier than expected, have an extended 2-year bear market, convince everyone the halvings don't work, convince everyone the 4-year cycle's dead, forcing people out of the positions, forcing that 70% of the long-term holders to capitulate and throw in the towel and free up some of their supply. And I think BlackRock will willingly buy absolutely every price the whole way down because their goal is to accumulate as much possible supply ahead of that QE bomb and outright return to balance sheet expansion. And I think only once they've acquired as much as they possibly can with an extended bear market decline, bought every dip on the way down, waited for the outright return to QE, then I think they know what's coming, right? Then they know that out of that return to QE, we will see Bitcoin actually reach those insane numbers that people have been calling for forever. But I don't really see a world in which they've only got something like 5% of the supply at the most. They might even only be 2% of the supply. I don't really see a world where they're just going to let this thing go up to obscene numbers right now with only 2% of the supply. It seems much more likely to me that if there is a nefarious plan, and I'm not saying that there is, it's just if I was BlackRock, this is how I would do it. I would have this kind of left translated or early right translated cycle that maybe tops no later than March of next year. Then I would walk the thing down. There'd be a whole heap of doom poster narratives, bear raids in the media. I'd be posting all kinds of propaganda in here to let people know that Bitcoin was going to zero and it's failed and the miners are going broke and all of this stuff. I would do anything and everything I could to make people panic out of their positions whilst I bought all of it, knowing that what's the difference between whatever the price is here and here is pretty irrelevant when we're going to take this thing to the multiple millions after a record amount of QE and Fed balance sheet expansion. So that's how this camel would do it if he was an evil BlackRock operative. Again, I don't necessarily think there is a big game plan here, but we can look at BlackRock and its Aladdin system, and we do know they have a history of trying to accumulate a lion's share of pretty much everything. That's what they do. So I think, how do you accumulate that lion's share for Bitcoin? Like I said, extended bear market, a whole heap of doom posting, convince everyone the thing's broken and going to zero, right in time for that outright return to QE and balance sheet expansion. Keep in mind, everyone's going to be expecting, and I see this in my comments all the time, oh, the Fed's going to print. As soon as we have a 20% correction in the stock market, the Fed will print again. There's no chance. That's not how this works. It's just because so many people have arrived and seen post-COVID, right? Around the COVID time, that's when everyone entered the market. And they think that because the market sold off during the lockdowns and that C19 plunge, and the Fed stepped in and did 6 odd trillion of QE, they think that that's normal. They think that the Fed's going to do that again. Well, it's not. That's just not how markets work. And if you look at the people that have been here any more than about 4 or 5 years, they will tell you that, okay? That's just not how this works. They had to do that because the entire world was locked down. The entire economy stopped. This time around, unless there's a lockdown again, unless nobody is able to go to work, unless something occurs that completely shuts the entire world down again, they're not going to print. They're going to be both late and reluctant to print. And probably the first round of QE, they're going to just dip their toe in the water and say, well, we don't want inflation to get bad again. We'll just do 1 trillion. We'll just do 2 trillion. And it's not going to work because it's not enough. So then they're going to do another 1 or another 2, and that won't work, okay? This is what people don't get. They're going to be very, very late and very reluctant to print. And all the while, if you look around on Twitter, if you look around in the comment section, everyone thinks that they can just print like they did in COVID because they're so inexperienced. They think that's normal, and they think that's what we do now. But like I said a million times, I'm afraid to break it to you, but that's not how these markets work. That's not what you're going to see. And that, again, fits in with this reasoning that Camel has been able to call the inflation cycle better than anyone. Everyone has been calling for sticky inflation. Remember, the risk here is deflation. The Fed is already late. Everyone got that wrong. They're still getting it wrong. They still think the Fed's going to print early next year and everything's going to go to the moon and all of this stuff. I'm afraid to tell you, it's just not how it works. Whilst we have got a quiet week, and whilst I'm still looking to buy cycle lows at the end of this month and then find one final leg to the upside to remain long until we see those third and final angles break down, I still can't get away from the primary hypothesis of the channel, and that is that things just keep getting worse for the economy. 4.8 million Americans are underemployed. The number of people that are working part-time but seeking full-time employment has spiked to 4.8 million in August, the most in 3 years. Okay, so take a look at this. What does that look an awful lot like? To me, it looks a lot like the prior times we saw the onset of a recession shortly thereafter. And again, notice the conceit and the arrogance in the market at the moment. Everyone's calling for a recession. Oh, well, no way you're getting a recession. No way, no way. But they're ignoring all of the normal indicators that flash on the way up. And their only argument is we look at GDP. and we go, well, GDP popped up, so we're fine. Again, we made this exact same mistake quite recently with inflation. Everyone was saying, well, inflation's sticky. They don't have the ability to tell the difference between a counter-trend wobble within a primary trend versus a real trend change. Such a rise as this right here where my cursor is, okay, has never occurred outside of recessions. So once again, we have yet another recessionary indicator starting to flash trouble is ahead. One thing I would also point out here is notice how it's always gradually, then suddenly, gradually, then suddenly, gradually, then suddenly. What have we got here? We've done the gradually and we're starting to get sudden, okay? This is what people don't realize. It's not going to take much to see this thing spike very, very aggressively. And the SAM recession rule, okay, has always coincided with a recession. And this current SAM recession rule flashing a recession indicator with a reading of 0.57 is also occurring whilst the Fed is cutting rates aggressively. And believe me, it hasn't even started yet. It's going to get a lot more aggressive. Why would this time be any different? Just because the media keeps telling you there's no danger of recession, just because the stock market keeps going up, the more parabolic and more vertical it all goes, the more nervous you should be, okay? Things do not remain parabolic for long, extended periods of time. And the public always buys the most at the top and the least at the bottom. So what stage of the cycle are we at here, okay? We are setting ourselves up for another violent spike here, but notice this is occurring on that third and final angle starting to take shape in here, okay? Something akin to this, maybe even steeper, depending where the cycle low forms. So I think this rally is slowly but surely getting long in the tooth. Again, let's be clear, I'm still long, I'm still strong, I'm still looking to add out of the upcoming cycle lows at the end of this month. But I am starting to notice that the market is becoming very, very, very bullish and very, very one-sided, and I am sure that soft landing narrative is going to continue to proliferate, particularly in the next couple of weeks once we see yet another surprise cold CPI print come in. Bitcoin still refusing to print a higher high, but it is doing okay, right? It hasn't had this quick and sharp sell-off just yet. Today is day 18, so sometime around day 30, we should expect a half cycle low. However, it could certainly be no more than this, okay? We could just see something like that occur, perhaps something like this, and then we can go again. Of course, until we actually print a higher high, then I still remain open to seeing some kind of deeper correction into that half cycle low. But as you can see, not really much is going on right now, okay? We're long, we're strong, we're respecting the cycle lows, we've got a clear and hard invalidation, and it's just a case of giving the market the space to breathe, letting the market give what it's going to give, and all the while being mindful that we have got that cycle low approaching towards the end of the month. We've also got a daily cycle low for the dollar approaching at the end of the month, as well as a daily cycle low for the stock market approaching at the end of the month. And again, there's no telling whether this is going to be a sharp decline, okay, and then a reversal, or whether this thing is going to be quite mild, one of these, and off we go. But either way, I am looking to add one final set of longs here, as I've been saying over and over again, because I believe we are indeed in that third and final blow off top angle. If we zoom out like this, it's starting to look very, very parabolic, isn't it? I'll be thinking of using that upcoming cycle low to get to full exposure by allowing the gains on the first couple of trades to finance the risk on the upcoming NASDAQ trade. Something like this, perhaps for the NASDAQ, would make a lot of sense to me. Cycle low and go, get a long in there, stop below the low. Note how the Dow Jones just continues to push higher. Again, we have to be mindful we have got a cycle low due. But so far, so good. Same deal with the Russell 2K. Not much to say about that. Hopefully this thing can get a push. The VIX slowly but surely working its way down for me to start to get some hedges on. I am, as I've been saying over and over again, mindful that we might get a little spike, a little pop up into that cycle low for the stock market, and then one final push to the downside. And I think sometime early October will probably be around the time when I'll be looking to get some hedges on a trend line break, something akin to this. And gold also due a cycle low end of the month, perhaps early October. I currently only have us on day 14, so we could probably see a high come in around day 18, 19, 20, and then a decline into that cycle low. And then the question becomes, what happens out of there? Positions we got on in the members section are looking pretty healthy for sure, so happy days there. And other than that, as you can see, there's really not a great deal to say, right? Nice slow week, easing ourselves in, waiting for those cycle lows to show up, and then again, we'll be looking to add and do the same thing all over again. I'm your boy Camel, I hope you're doing well in life. Until next time, take care from me, all the best, cheers, bye.
Camel Crew, come close, it's that time again. People losing their minds, calling for the world to end. Sudden trend line break, just to spook you out. If it gets to you, maybe go fishing for some trout.